All right, let's dive right into this explainer because there is a massive structural shift happening under the radar right now. While the daily news cycle is always caught up in the latest interest rate decisions or geopolitical flare-ups, a major systemic change just quietly took place in the financial world. China just built and switched on a state-backed physical gold and silver clearing system in Hong Kong. And to be clear, this is not a rumor, it's not a proposal, it is a live operating system that fundamentally challenges Western dominance in exactly how precious metals are priced and traded globally.
So here is our roadmap for today. We'll start with the new Eastern Gold System, cover the silver connection, compare paper versus physical markets, look at the threat to the dollar, establish 2 timescales, and leave you with 4 signals to watch. This is literally the million-dollar question we've got to keep in the back of our minds as we go through this data. For decades, the price of precious metals has been decided in basically just 2 cities, London and New York. So can a brand new Eastern physical infrastructure actually redraw that map? That question sets the stakes for exactly what this new system was built to accomplish. Let's get right into Section 1, the new Eastern Gold System, a new infrastructure. What's really mind-blowing here is the sheer completeness of what just went live on July 7th. First, you have the Central Gold Clearing and Settlement System, and that's run by a company wholly owned by the Hong Kong government. Second, we have Delivery Connect, which creates this direct physical pipeline to the Shanghai Gold Exchange, literally letting traders move actual metal back and forth to mainland China. And finally, they launched the HAU price benchmark, which instantly went live on Bloomberg terminals globally. Like I said, these aren't just ideas. This is live, government-backed plumbing designed to price and settle metals directly in the East. And get this, it's not just a regional experiment. Look at the names on the board of this new Chinese system: JP Morgan, Citigroup, UBS, and HSBC. These incredibly powerful Western institutions are showing up on day one because, as analysts note, they simply refuse to be left behind as trading volumes start to shift. To wrap your head around the sheer physical scale of this ambition, we just have to look at this number. Hong Kong has announced plans to expand its physical gold storage capacity more than 10-fold, targeting over 2,000 metric tons by the year 2030. For some context, that is roughly the weight of 1,000 average-sized cars, but in solid gold. They are absolutely preparing to hold massive amounts of real metal to back this new trading hub. Okay, moving to Section 2, the silver connection. 2 ends of one rope. Now, you might be wondering, why does a gold system matter if you're primarily focused on silver? Well, officially, the announcements out of Hong Kong all say gold infrastructure. But gold and silver are essentially 2 ends of the exact same rope. The Shanghai Gold Exchange, which is the venue at the absolute heart of this new Delivery Connect pipeline, is also one of the world's largest and most important physical silver exchanges. It has its own silver vaults, its own contracts, so the infrastructure moving physical gold is the exact same channel that moves physical silver. Silver rides directly on these newly built rails. And this brings us to a massive catalyst. Silver has a genuine, worsening physical shortage underneath it. The world has actually consumed more silver than it's mined for 6 straight years now. And the demand isn't just investment, it is aggressively industrial. The smart device you're likely watching this explainer on, solar panels, electric vehicles, and the intense electronics required for the whole AI boom, they all require silver. And for most of these cutting-edge uses, there is simply no chemical substitute. As this new Eastern market starts rewarding actual physical scarcity over financial derivatives, silver's deepening industrial shortage suddenly gains immense pricing power. Which transitions us perfectly to Section 3, paper versus physical markets. A tale of 2 markets. Here is the fundamental difference in market philosophy, a real clash between East and West. Western markets have historically relied heavily on paper contracts. The paper market in London and New York vastly outnumbers the actual physical metal available, which a lot of folks argue creates artificial price discovery that stays totally disconnected from real-world supply. Contrast that with what China just built. It's an ecosystem where physical reality drives the price. It's built entirely around real metal changing hands, settling trades with actual physical delivery during Asian trading hours. It is the exact opposite of the Western paper model. And this physical focus is definitely not by accident. Data shows the Chinese central bank aggressively purchased physical gold for 20 straight months leading up to this launch. This proves we are looking at a highly coordinated, incredibly patient, long-term accumulation strategy. They've been hoarding the physical asset while simultaneously building the actual house to trade it in. Let's look deeper in Section 4, the threat to the dollar. Bypassing the USD. Historically speaking, whoever sets the metal price holds real economic power, period. For most of the 20th century, London was the undisputed center. Then, post-WWI, as American power rose, New York grew into the absolute giant of paper futures. This Western duopoly has ruled for generations. But what makes today historic is that the Hong Kong and Shanghai integration marks the first credible, government-backed attempt to build a third parallel financial center from the ground up. According to financial historians, they aren't just trying to reform the Western system, they are literally building an entirely new one right next to it. And here is where the dollar comes in. Hong Kong is already the world's largest hub for offshore Chinese yuan, handling over 70% of global offshore payments, with over $1 trillion yuan in deposits. But more importantly, China is actively exploring gold futures in contracts priced and settled entirely in yuan. By creating a complete closed loop to buy, settle, and store precious metals in yuan, China is effectively offering nations a fully functional financial pathway that bypasses the US dollar completely.
So why would other nations even want this? Well, because of what happened in 2022, when $300 billion of Russian central bank reserves were frozen overnight. It sent a massive shockwave across the globe. For many global observers, it demonstrated that dollar reliance could easily be weaponized. For nations worried about being cut off from Western finance, this new physical, non-dollar, yuan-based metals pathway is an incredibly attractive and secure alternative. Precious metals, after all, are the one form of money no rival government can just print or freeze. Let's ground this with Section 5, 2 different time scales, short versus long term. So, time for a reality check. This new Eastern launch is not going to magically change the price of gold or silver tomorrow morning. In the short term, the metals are still completely hostage to Western forces. The Federal Reserve, interest rates, oil spikes, and the strength of the dollar. That is all short-term noise. But the long-term shift, the one driven by structural de-dollarization, massive physical infrastructure builds, and those deep industrial shortages we talked about, that is the current that rewrites the future over the next 5 to 20 years. To put it simply, and this is key, the Hong Kong system is about the long game. It doesn't change what happens at the next Fed meeting. The West absolutely still dominates the global benchmarks today, and London and New York won't be dethroned overnight. We are watching a gradual, multi-year shift of power from paper to physical, and from west to east. It's a series of quiet steps that eventually redraws the entire map. Finally, Section 6, 4 signals to watch. Tracking the revolution. You can't just react to the daily news cycle, right? So here is your personal dashboard for tracking this. First, watch the volume. Are real metric tons actually flowing through that new Delivery Connect pipeline? Second, watch for the actual launch of those yuan contracts. That is the direct challenge to the dollar. Third, watch who joins the board next. If foreign central banks and sovereign wealth funds start routing their metals through Hong Kong, this becomes very real very fast. And fourth, watch the East-West premium. If physical metal in Shanghai persistently trades higher than the paper price in London or New York, that is the market literally telling you that physical reality is being valued more than Western paper. History shows us that massive shifts in financial power always feel slow while they are happening, but they look like inevitable turning points in hindsight. Brick by brick, the very infrastructure of the global metals market is being redrawn. So I'll leave you with this question. As this quiet revolution continues in the East, championing actual physical scarcity over paper promises, are you watching the short-term noise